Well, the coronavirus certainly stopped property investors in their tracks earlier this year, but 2020 didn't start that way. I'm sure the majority of our 2 million plus Australian property investors were really glad to wave goodbye to 2019. They were looking forward with confidence after a year that featured the Banking Royal Commission and a very disruptive federal election. Now, this group had grown significantly over the past decade in both size and in knowledge. They'd become very aware of the staggering number of Australians facing a very harsh reality around their poorly planned retirements, choosing instead to step up and take control of their own financial future through property, rather than risk living a lifestyle that would be restricted to a level basically of what a pension could afford. We'd all hate that. Now, we all know that 16% of Australian taxpayers own at least one investment property, but you may not realise that surveys have highlighted that more than 4 times that volume of taxpayers aspire to purchasing an investment property. So the big question is, what's holding them back? Typically, the reasons for being cautious about buying property would instantly come to mind, but today those reasons are getting much harder to find. Even our conservative property market analysts are forecasting growth in the years ahead. Investor confidence is rising so fast. The doom headlines are fast being replaced by boom headlines. Interest rates are historically low, providing investors with, say, 10 or more years left in the workforce, an incredible opportunity to build life-changing wealth without the need to sacrifice any lifestyle along the way. Now, this is in stark contrast to how much more difficult it was to build wealth in the past. I can remember when interest rates were in the double digits when I first started investing 30 odd years ago. And yet today, investment loans are available under 3%. Investors, you need to stop and pinch yourselves. This window of opportunity to leverage your wealth may never be seen again. And whilst interest rates have fallen, house prices have continued to climb over the past 25 years, with the national housing market recording an average of 6.8% growth during that period, almost perfectly aligning with fulfilling the rule of 72 that tells you that if your property averages 7.2% growth, it will double in value every 10 years. And with the best growth markets over the next 10 years expected to be found in our biggest regional markets, investors are quickly realising that these affordable locations have largely been overlooked in the past, with many of those locations tripling in values over the past 25 years. Please, guys, be warned. The window of uncertainty created by COVID-19 is closing fast. Investors should be acting now, because when the lending criteria eases early in 2021, I think we're going to see a wave of property investors entering the market in numbers like we've never seen before.
Location approved, property approved, safety guarantee. Invest approved, protecting you every step of the way.